Hello everybody and welcome to the next lesson on our classroom. The lesson we're going to go through today, as you can see, is market structure. Now this is the lesson which a lot of traders tend to skip over and just brush over, but this is the game changer for any strategy, not just our Wyckoff strategy. Any strategy you run, if you get this wrong, your win rate will diminish. If you get it right, then you will start seeing gains. So we're going to run through this short presentation and I'm going to show you how to practice and how to actually work through market structure. So by the end of this lesson, we want you to be able to identify uptrends, downtrends, and range in markets. You're going to be able to recognize higher highs, higher lows, lower highs, and lower lows. Now with this, you're going to have an understanding of market structure and why it's going to be the foundation of every trade, really, basically. You're also going to learn how to analyze the charts even before you start looking for entries with your chosen strategy, or ideally with our Wyckoff strategy. So let's get straight into it. We're going to keep this basic because I know there's people on this who are learning for the first time, and I know there's people a little bit more technical, but we're going to keep this to the basics. So let's go. What we can see here is a basic uptrending market. As we can see, we have a higher high, followed by a pullback to a lower high, continue to a new higher high, and so on, all the way up the market, showing us that this is clearly an uptrending market. Now, conversely, we have lower lows, pulling back to higher lows, as the market's still pulling down. It's a higher version of the low, and then pulling back and continuing to run down the trend. Okay, by seeing this and the pullback, we can see that this is also a downtrending market. We will go a little bit more technical into this in a minute, but if you follow with me, this is literally, we're keeping this as basic as we can. As we can see here, this is just literally a ranging market, right? In a ranging market, we've got the market looks very flat, okay, and it can break in one direction or another at any time, right? Uneducated traders, usually retail traders, would try to find the first breakout beyond a previous flat market and try and trade it down. But as we can see, the market can trend and break in both directions. As Wyckoff traders, we like to sit back in these markets and wait for all our confirmations, because this is the time where we're going to be shown whether the market's going to turn up or whether it's going to go down. And we only go in once we've had all them confirmations, which will be on a previous lesson when we start looking at schematics. So we have a couple of rules when it comes to following a trend. First of all, the pullback, and this is one that a lot of people miss, the pullback must reach a minimum of 38.2% of the leg to qualify as a pullback. Now, for a pullback to confirm, it must break the previous higher high or the previous lower low to confirm that your pullback is then a structural point. So we're going to follow these through and we're going to show you exactly how we identify these and confirm them as a pullback, so that we know that we're using the correct point of the market to tell whether the market's changing direction or not. Okay, and for the trend to change direction, it must pass the previous lower low or higher low. So lower high or higher low, sorry. Right, so as you can see here, we've got a basic market again, but what we're trying to do here is we've got a leg pushing up with a pullback. Now, if we follow our rules, the pullback must reach a minimum of 38.2% of the leg to qualify as a pullback. Now, has this reached? Okay, as it's pulled back, it's gone beyond the 38.2, so this would qualify as a pullback. Now, to confirm it, we need to break, as we say, for a pullback to confirm, we must break the last higher high or lower low. As this is an uptrend, we want to break the previous higher high, make a new high, and this will confirm this as a structure point. So as the market pushed up here, it gave us a new higher high beyond the previous higher high. This was beyond the 38.2. This is now an actual structure point. If the market was to come straight down there and break this point at this level, it would then change the trend down to a downtrend. Now, if we go further along the market, we can have a look again at the next one. So we've got a new low and a new high. So from the high to the low, because we're in an uptrending market, we're going to put our fib on. Now we want to make sure that this pullback goes beyond the 38.2. Okay. In this scenario, we did not need the fib because we can clearly see this pullback has gone deep into our previous leg. It's actually gone to the 80%. And then it's pushed up and gives us a new higher high beyond this one, which confirms this now as a structure point. So as this point before would have been the breaker structure, we've now moved our breaker structure because of this. So we've got a confirmed and qualified lower high, which means if we break beyond it, we broke our structure, which means that our trend has now changed from an uptrend into a downtrend. So as we can see here, we would carry on the same scenario. We flip our fib on the head because we're going to go from our low to our high and see if this pullback, now we broke structure, we are looking for downward movements in a downtrend. So we've got a lower low, pulling back beyond our 38.2 to our higher low, and then it's pulled beyond our previous lower low, which means this higher low is now confirmed as a structure point. If the market was to come back up here and break this at this point, we've now changed the direction back into an uptrend. So following these simple basic rules, which are a pullback must reach 38.2 of the leg to qualify. A pullback to confirm, it must break the previous higher high or lower low, as we see in the red at the end. And for the trend to change direction, it must break the last lower high, which is the pullback, or the higher low, which is the pullback in the opposite direction. Okay, so these are the foundation of all your trend, and it's very basic to be able to follow. Okay, so we've pulled this to here. Now, how do we practice this, right? Without just jumping on the charts and trying to measure them. What I want you to do is I want to get you to really visualize it and be able to see what's happening on the markets. So what we're going to do is we're going to skip to another page. We're going to skip to screen 1. Now, what you can see here on the charts, right, so we're going to pull this down. Now, you're going to grab your path tool and you're just going to do some squiggles, okay, in any direction. Okay, so we're going to work out now whether this is an uptrending market or a downtrending market. Very simple. So we've got a starting point here and we've pushed up, right? So previously, so this is our new high. We can assume that the market has come up as far as it needed to from there, from this point, yeah? So we are currently up trending, okay? Okay, at this point, we're now uptrending because the market's pushed up, right? So what we need to do now is we want to see whether we pass this leg at any point. Now, let me pull this down to the right point so I can see it. Right. Well, that's a bit close, isn't it? So we're uptrending at this point. It looks like on this market, it did not break this previous low. It looks like it's very similar. So it's maintained the uptrend, and although this would qualify as a deep path. If this would have went just that little bit past, this would be an uptrend. This would make this a downtrend because it was on or just above, around about there. We didn't break it, So it's maintained its trend. So this would be a pullback. So now what we need to do is we need to qualify this as a pullback. So as this is the low point, our rules were we need to pull back more than 38.2, which is up here somewhere. So we're way beyond it. We've gone almost to 100%. And then we've pulled up. Did we pull up and break to make a new higher high? Okay, as we can see in this one, we did not. So this means nothing to us. So we're still uptrending, and this is not qualified as a pullback. Now, as we pull back down, we haven't broke the high or the low. Okay, so these are where we need to break to be able to qualify. So we pulled up, we didn't break the high, and we didn't break the low. So effectively, none of this is market structure and should never be in any way added into your structure. So we've got a pullback here and a pulled up. It did not confirm. So this, as we've measured it so far, it doesn't matter. But it did pull back. This is what we would call noise because it didn't break in either direction. It just continued. So then now we've got a break of structure beyond the previous higher high. So this would now confirm as our break of structure point, our lower low. So we can move this to a lower high. This is a pullback. And this is our new high point. Right. Now, if we're going to measure it on a fib, we would go from there to there. This did not break anything. This did not break anything. It might as well be one straight line. Okay, so don't be fooled into thinking that any of these are parts of structure. Right, so as we move on, we're currently maintaining and uptrending. So we need to know, do we break the high or do we break the low? So we look at the next leg. Okay, remembering that this and this has got nothing to do with structure. This is our structure point at the moment. And that's why we've got our line on there. So this next leg after the higher high has pulled down and it's broke our structure. So this is now it's now a downtrending market. Okay, so if we were following anything there, we would only be looking for qualified pullbacks to qualify as a structure point. Then we'd be looking for trades. At this point, we know that the market is downtrending, but nothing's been confirmed as yet. So as we see it over here, the next leg. So we're going to pull that to here because we're now downtrending on this leg. So none of these structure points actually matter anymore. This, if I can move it somehow. This is now our structure point, as is this up here. Okay, so what we're going to do, we're moving from here to here, and we want to know, do we break the high or do we break the low? Now, the market comes up, again, as it did before, it didn't break the high and it didn't break the low. Right? Although this was just a scribble, this is basically our side moving markets, or a larger time frame market like the daily and the weekly would generally look. So we just need to make sure that we're going in the right direction. And we would also do that with right down to all the time frames that we need to do. But this is the importance that people miss out on every trade. So as we can see, we pushed up. We didn't break the high. Okay, and we haven't broke the low from the pullback. So this, again, as it was with these two, none of these form structure points, although people will be fooled into thinking they do. If it doesn't break the high, it doesn't break the low, it does not matter. So we've got a structure point here, which pulled back, and then we've got a new break at the top. Okay, because we broke at the top, this is our pullback now. And this market is now uptrending because we broke above this one. So as we're getting closer, we're sort of working out what way we want to be trading on this market. So we've gone from here to here. We don't need a fib. We can see that the next move did push but push beyond our breaker structure. As we see in the illustration, when it's hit red, we've now got a confirmation that it's downtrending. Now, what's happening here is there's our new, right, we don't need this box, okay, but we can copy this. So we're now in a downtrending market because this is where we're going here. As we can see, it did pull up and it did not break this. It's not broke that. And so far, it hasn't broke that. So if we was trading this market, our last break was here, we'd be looking for entries. Wherever the market is now, ignoring this, wherever the market is now, we'd be looking for downtrends. Right? So we'd be looking for the entry around about here, whatever your confirmation is. Maybe there's a Wyckoff distribution in this area. We'd be looking to take it all the way down. So this being a downtrending market, we know that we should only be looking for sells. Ignore the fact that that's got an arrow pointing up. That's just the end of the screen. So we know that the last break was downtrending. This could be doing anything today and then come and confirm. But the market is downtrending because it broke beyond, giving us a new lower low. Okay, so let's have a little look at this on the charts. Right, because the charts are a little bit more tricky because there's more going on. Right, as we can see, the market pushed up and then it pulled all the way back down to a new low. And then it pushed up and then it pulled down to here. Ignore these lines. These are markups from previous setups, possible setups, which we can go through in the future. Right, so we need to confirm where our pullback is. So we've broke beyond this higher high, confirming this as a low point. Now this is now confirmed. And we pull our line, we now have a structure point here, yeah, at the new low, because we went higher high, pulled back, lower low, and new higher high. So we broke beyond this, so we're uptrending, but our last point was down here. So this is our breaking structure point. Okay, now we've got to measure on this leg whether this is a pullback or whether this is nothing. We may ignore it if it doesn't reach the 38.2 and move up to the next bit. So we'll get our fib. We want to go to the top of the market, down to the low of the market. And what we're going to do is we're going to follow our rules. Our rules were it must be beyond 38.2 and then make a new high. As we can see, while this has made this structure, we have broke beyond our 38.2, confirming this or qualifying it as a pullback. And as it pushed up, it made a new high beyond this high. I could mark them up. So we've got a high there, high there, and then we've got a new higher high. But what we want to do, we need to confirm this is a high. We wouldn't need a fib on this because we can see it's quite far up, but we will put one on anyway. So we've got the fib there. So the fib is going to go from the new high down to the new low. And we've got to confirm it's gone back beyond our 38.2. As we can see, it is, which means it pushed up and gave us another high. So it went beyond the previous high, qualifying and confirming this as our new pullback. So our structure point moves from there over to here. Let's get this out of the way. So anything the market does beyond this would mean that the market is now downtrending. Right. So what we do here is we pull this here. And we pull this to here, which is our new confirmed breaker structure point, which is our lower high. Pulled up to our lower low. Okay, we have got points where they've pushed, but to qualify as a lower low, this would need to break beyond this and then go up. So there's nothing in there now that tells us that we're going to continue going up because we didn't break and then we didn't cause a new higher high. So what the market's done instead, the market's pulled down and continued to beyond our breaker structure, and then it's pulled up. So does this qualify as a new higher high? So we'll go from the low to the high. As you can see, this does not qualify as a lower low. So realistically, we could go around there, and we're waiting for the pullback up to here somewhere for this to qualify as a lower low. So either bring it back down, or it's made its way down to this Wyckoff accumulation, which is going to take the market back up. But we'll go through that on the next lesson. Accumulations will be in the next lesson. So basically what we've worked out here is where our high points are, where our low points are, is our lower highs. Okay, we've got a lower high there. We broke beyond this lower high because it was confirmed as a structure point, as it pulled from there to there. This was all confirmed and qualified, and we went past it, which means that this market is now downtrending. Okay, it's been downtrending for quite a while, right? The fact that you can see that we're looking for it to move up will be explained in another lesson. Although the market is pushing down, we know how to look for certain causes where the market's going to be turning around, which you will know also over the next coming lessons. So we know now that a normal trader would be trading this down and saying this is now in the downtrend. We're only looking for sells. Okay. So what I want you to do is do this on a regular basis. Okay, and work out yourself whether it follows the rules. Okay, the rules were a pullback must reach a minimum of 38.2%. Yeah, and to qualify, it must make a new higher high. Yeah, so I've got a pullback minimum of 38.2%, which this one did, and make a new higher high. It did, but not at these points. It made it there. Okay, so that would mean the line for this structure would go from here to there, and then straight across there, ignoring what we seen in there, because this did not break the low and this did not break the high. So any questions on this, feel free to put it in the chat or message me personally. I can go through this even in depth with you. We will be going through this on questions and answers, and we will be going through this pretty much on every session we go on. We're looking for this before we even start considering whether our distributions or accumulations are going to even work in these directions. So this will be on pretty much every single live that we go on. And I want you to do as much practice as you can with your own scribbles, even if it's just on a pen and paper, and then have a little look and see whether you can work out whether your scribble that you've made is going uptrend or downtrend, just by following the three rules. Is it 38.2? Did it break a new high or a new low after it broke to 38.2? And has it broke the previous one to make the market change directions? Stick to them three rules and you're golden. Right, guys, I'll see you on the next one. Thanks for joining in.